Hello guys, hope you're well. We should be having our class right now. So I'm a bit offline on the WhatsApp, but I think Maureen is sent you the link. So we should begin right now. I did a recording of the last class. So we were doing that was last week, I think Tuesday. Yeah, I should have Tuesday or Thursday. We were doing, let me check. Yeah, we were reading price action using candlestick charts plus support and resistance. So today I'm going to touch moving averages. It's a very, very important topic. We'll still combine now whatever we have learned. Let me share my screen. A minute. So yeah, so I think we are good to start. The next 30, 40, 50, 45 minutes. Let me get my notes ready. So I'll be purely using, yeah, also another thing, we have an online portal. So, but that one, remind me, I'll be sending you guys later. Plus the manual, I think the manual, you guys have it. Hello, let me call you in a few, I'm in class. Hello. Sorry. Share screen. So let's get started, guys and ladies, so that at least we have enough time. Today we'll be having more on. So today we were to do Fibonacci with the offline class. I have not touched on Fibonacci. It's a bit diverse. So I've already done a video. So for you online guys, I'll just send you the video, you watch it. I did it last year. Then I'll give you a so give me a minute. This thing is lagging. So 1 minute, guys. We wait. Let's get the manual. So 1 minute. Why is this thing not working? So 1 minute. Oh, we are here. Okay, so one minute. Okay, so I think we are here. Let me close.
Yeah. Yes. Haina shida.
One minute. Let me close some of these tabs. So I think that's better. So today we'll be doing moving average. So let me get the notes here. So we said you can use the online form. I also have the manual and also have some materials. So let me go directory, and then I'll be analyzing the New Zealand today and the Aussie. Aussie is Australian dollar or AUD. So give me a minute. I open also the chart. Today my machine is slow a little bit. So, and I'll be using the M30. So I have New Zealand here, and then I also have AUD. AUD is used New Zealand for today because it's a trend trade. Yeah, this is my chart. I think this is okay. So let me go to AUD. So just a minute. Oh, it's here. So at least let me get a plain chart. AUD. Come on. Yeah, fair. So I have AUD. I'll use this chart, AUD USD. So this is I'll be using. I'll also combine it with RSI and stochastic because of oscillators. So let me first go to a little theory, then I'll to practical aspect. So we're just going to understand moving up and how we trade them, or how basically they operate in trading. They use the support and resistance. They also really love trading trending markets. Trending markets are like these, whatever I'm showing you here. So this is a trending market because I'll only zoom out because you can see the market goes up, down. This is a very good trending market. This is on AUD. And I'll only use one M30, and I'll use M30, and I'll also use 1 hour chart. So let me first explain. The internet is a bit slow. It was quite chilly in the morning, it rained. So is why it's a bit slow. So give me a minute, guys. So let me get my phone because I think because of time. So guys, give me a minute because I'm seeing this internet is very, very slow. So get my phone, guys. Just a minute. So guys, I'm back. Let's go to Baby Pips. So that because we save on name. So I have my phone here. So just go to the notes on moving average. So just give me a minute so that I explain. So 1 minute. Yeah, I'm online now. .com. So let's get started. I'm on the phone. So when I'm on moving average as at the moment, because my losses are necessary as long as they're associated with a technique to help them. So let's go to moving average. How to trade Forex. Yeah, I'm already there. So I hope you're there also on the website. Just go there to course outline moving average. It's exactly Fibonacci. So I've told you for Fibonacci, I'll send you a video so that you have a look at what it is. So I'm on the phone. So you should see something like this, moving average. What are moving average? So let's begin. A moving average is simply, so I'll be reading as I'm reading, pay attention because now as I'm reading, I'll be showing you So first of all, let's go to moving average. A moving average is simply a way to smooth out price fluctuations. Last time we did price action. So because I really don't meet most of you, we decided I'll be showing you more practical. So I'll have my chart ready here. So to be an interesting class, so pay close attention today because mostly I'll analyze AUD. AUD is Australian dollar, basically the Australian economy. I really love that economy. There are not very many, so it does very well. It's easier for the government to manage whatever is happening there. So let's get started with the class. So I hope you are there on Baby Pips. Also, if you have questions, let's have our chat ready here. Admit, Octavia's welcome. It's been a while, I've not seen you. Just a minute. So let's continue. So a moving average is simply a way to smooth out price fluctuations to help you distinguish between typical market noise and actual trend direction. For Q&A, please, for Q&A. So just a minute for Q&A. Okay, that's for in case you have any questions. Okay, let's get started. So we have our graph here. I've drawn some Fibonacci. Those Fibonacci, I'll be sending you the video. Then I'll zoom out a little bit, or let's say within the 1 hour. Yeah, I think that's better. Let's do it at that. You can see the trend, guys and ladies. You can see the trend. So this is what I'm timing, and this is what was also what I'm timing. So I'll explain how you to smooth out price. This is our price here. You can see. So I'll explain how to smooth out now, or how to read markets using moving average. So let's first do the theory. So by moving average, you mean that you're taking the average closing price of a currency pair for the last X number of periods. So you can see here there is insert, then we have indicators, then you'll see trend. I hope you can see insert, indicators, then you'll see trend here. Then the moving average is here. So I'll click on the moving average. So this is what we are talking about. So I usually use 20, but here I'll use 10, and you can give it a color like yellow or blue or red. So 10, maybe we can give it red, or 14. Let's use, let's use 10 and 5. So this is the last 10 periods. So this is what I'll be explaining. So let me first go. So basically by moving average, we mean that you're taking advantage the average closing price of a currency pair for the last X number of periods. So you can see a chart down there. It would look like this. So if you are looking at the last 10 periods, as you can see, moving average looks a little squingy. This type of chart indicator is called a chart overlay. So when the moving average is overlaid on the chart. So just a minute. I don't know if you guys can see what I'm seeing. Let me see if my internet is back here. Yeah, it's back. Okay, let's do this. A minute. So this is where I'm reading from. Moving average here. Yeah, what are moving averages here? This is where we are. And then I'll explain the different type of moving averages. And then, from there, I'll be able to show you how to read them. So let's go through them within the next few minutes we have. And then we'll add this to our chart, or we'll add this to our trading strategy. So last time we did candlesticks, and I believe I've sent videos and books on candlesticks. And then we were able to read price action. It was a very interesting class. So today, let's go through what are moving averages. So this is what I was talking about. A moving average is simply a way to smooth out price fluctuations to help you distinguish between typical market noise and the actual trend direction. By moving average, you mean that you are taking the average closing price of a currency pair for the last X number of periods. So that chart would look something more or less like this. So this is what I'm talking about. You can see this is a moving average for the last 10 periods. So let's understand how these periods work. Then we are going to plot moving average on our chart. Then we can combine it with candlesticks, or we can combine it with anything else. So let's keep going. So you can see it looks like this. So just a minute. So the reason you're using moving average, it looks like this now. So the reason for using a moving average instead of just looking at the price is due to the fact in real world, apart from of course Santa, trends do not move in straight lines. So what I like about moving average, you'll see something closer to this. I hope you can see this. It's like a wave, you know. If you understand waves, how they move, like a normal ocean. If you understand how those waves work, basically they don't move in straight lines, they move in waves. So I want you to understand moving average, they somehow or not somehow, they are able to actually define the real trend. And you can be able to follow that trend and make some serious good money, whether you're day trading or what you're doing. By looking at the slope of the moving average, you can better determine the trend direction. As we said, what are they doing? They're smoothing out the price action. So just a minute, I have too many ads here. Okay, let's stop seeing this ad, stop seeing this ad. Good, not interested, not interested. Thank you. So let's keep going. Generally, the smoother the moving average, the slower it is to react to price movement. The choppier the moving average, the quicker it is to react to the price movement. So to make a moving average smoother, you should get the average closing prices of a longer period. So guys, ladies, pay attention to this. Now, this is what I'm explaining, this length. That length is what I've plotted right now. This period, whether you're using 10, 5, 20, this is what now I want to explain before I plot my moving average on my AUD or on my pair. So let's first finish on the theory. So how are you able to determine what length? So the length, so let me take my time on this one. The length or the number of reporting periods, just a minute. Yeah, the length or the number of reporting periods, including the moving average calculation, affects how the moving average is displayed on a price chart. So the shorter its length, the fewer the data points that are included in the moving average calculation, which means the closer the moving average, Nelly, welcome. The closer the moving average stays to the current price. So if we are using a shorter period or a shorter length, we are looking at fewer data points. If you're using 5, for example, we are looking at the last 5 hours. We are losing at 10, you are looking at the last 10 hours. You're using 20 or 21, we are looking probably the last 20 or 21 days. This reduces the usefulness and may offer less insight into the overall trend than the current price itself. The longer the length, the more the data points. If we are using 200 moving average, of course, we are looking at a longer period. Let's see how you are able to calculate this length. Hilda, welcome. So if there are too many data points, price fluctuations may become too smooth that you won't be able to detect any kind of trend. This situation can make it difficult to recognize if price direction will change in the near future. For this reason, it's important to select the length. Hope you guys are following, the length or periods that provides the level of price detail appropriate to your trading time frame. So number one, before you use the moving average, you need a time frame. There are people comfortable with 1 hour, others are 30 minutes, others are 4 hours, and depending with what strategy you're using. So now we have two, simple and exponential moving average. So let's see the difference. So they are down here. So they do not predict price direction. Instead, they define the current direction. Are you ready? So anyway, let's have a look. So let's define simple moving average first. So here is simple moving average. What is it? It is the simplest type of moving average. Basically, a simple moving average is calculated by adding the last X period closing prices. So number one, we are looking at the last, this is the price. This is what I'm talking about. So what are we looking at when you're using simple moving average? We're looking at the last X periods closing prices. And then we divide that number by X. Okay, that's a bit hard. So let's see. For example, if you plotted a 5-period moving average on 1 hour chart. So let's plot a 5-period moving average on our, now this is 5. 5, you can give it maybe yellow or orange. Or let's give it, yeah, yellow is better because it's visible. So this is simple. You can see we have simple, exponential, smooth, and light linear weighted. So today I'll only speak about simple and exponential. If you need to know more about smooth and linear weighted, I can do that later. But for today, because of class and time, let's just do. So I'll say okay. So you can see that's my yellow. You can see the line. It's somehow close to the price. This is my 5-period moving, a simple moving average. So that is to mean if I plotted it on a 1-hour chart, that would add up closing prices for the last 5 hours. Then divide that number by 5. So if you divide 5 hours, divide by that 5 becomes 1. So that is to mean every hour I can be able to, this is 1 hour. So every hour I can be able to track where this price is going. You can see it's been on a very strong uptrend. If I zoom out, you can see here, the candles were somehow below the moving average. Can you see? Then when they started going up, they were somehow above the moving average. You can see, guys and ladies, you can see. So let's keep going because now I'm going to combine this 5-period moving average with something else. So voila, you have the average closing price over the last 5 hours, string those average prices together and you get a moving average. If you are to plot a 5-period simple moving average on a 30-minute time frame, you'd add up closing prices of the last 150 minutes and then divide that by number by 5. The same thing, if you are to plot 5-period moving average on 4 hours, okay, now you understand. So I'll just use 1 hour for today so that I don't confuse you. The most important thing with moving average is smoothing out the price, being able to understand what's happening to the price and where the price is going. We need to understand. So understanding how it works, you can adjust different and create different strategies. So moving average, do not turn into this. So let's have a look. So here you can see I have 5, 62, and 30. So what does this mean? 5 is closer to the data points. The data points are these candles. So that is to mean I can be able to track where these candles are going. You can see 30 is somehow far away, then 62 is quite far away. So it depends, number one, with the time frame you're using. If you're day trading, of course, we'll be using a shorter moving average. You can use 5. So let me add another one. I'll add 5 and 10 here. So I'll let you know why. So because now I want just to know every 1 hour where my trend is going. So same, simple, but this one I can use which color? Red. So that we have yellow and red. I need the visible colors so that you can be able to see them. You can see, there they are. So you can see somehow they're in within. You see they have crossed. So that means it might be coming down. But now I'll be using oscillators to see whether I have hit my overbought or oversold. You can see 30 here becomes my oversold, 70 usually is my overbought, then 50 shows me whether the market is trending upwards or trending downwards. So I'll be doing a class on oscillators later. So let's do moving average for today. So let's keep going because mostly I've said I'll be showing you more or less on. So there is a problem with simple moving average. They're susceptible to spikes. But why is SMA important? Let me show you why SMA is important. So just a minute. There was a point I needed you to understand on SMA. Where is it? Oh, okay. I think it's on the other one. So let's go to the next moving average. It's called exponential. So what SMA does, it smooths out price action, or basically in real time, like right now, if I'm using 1 hour or 30 minutes, you can see. Can you guys see? I can be able to see the real price. So the reason I was telling you, most likely this price might not be going down is because you can see on M30, the next candle about to form, it has already hit our 30, might start going up. So what I need, I just need on 1 hour to see that this price is trending up or down. I'm also going to add another moving average. So let me finish on the theory first. So let's go to EMA. What is EMA? So I will not calculate all this to be a lot of math. So let's just go to the definition. Yeah. So if there was a way that you could filter the spikes and that you didn't get the wrong idea, it's called exponential moving average. What EMA does, it gives more weight to the most recent periods. So let's see. So in our example, for example, EMA would put more weight on the prices of the most recent days, which would be day 3, 2, and 4. So let's see the difference between exponential and simple. So now this is 30. You can see, now I want to show you the difference. You can see the blue line, 30 SMA, the red, 30 EMA. So you can see the blue is further away from the candles. Then the red is somehow closer. So let's see the difference now so that we can be able to plot them. But I'm not going to plot 30. I'm going to plot you a very easy strategy with the moving averages. So whether you're day trading or swinging, I'll show you how to read moving averages. So let's start with the exponential. When you want, so this is the most important thing. When you want a moving average that will respond to the price action rather quickly, then a short EMA is the best way to go. That means a shorter, like the 5 now, we can put the 5 to be EMA instead of, but now I'm gonna use a shorter time frame, then I'll zoom in a little bit. So I'll just click on the moving average, then I'm going to go to the properties, but now I'm going to change to simple. See, from simple, I'm now going to use exponential. Then I'm going to say, okay. So you can see it has somehow moved closer to the data points or to the candles. So the closer it is, the more we are able to read or we are able to know. Let me even go to M15 so that you have a clear look, because I'm using a very shorter moving average. Then I'll zoom out a little bit. So you can see, although the problem is this pair is a bit, it's still, you know, but it's trending. You can see it's trending. Let's go to H4. Yeah, I think H4 is far much better. Look at it now. So you can see this is a zone. So I'll be explaining what this zone is about. So you can see where they crossed around here. This was the point where you would have entered your good buy around this area. So you can see they have not crossed yet. So they're about to. But as I've told you, this might be a small sell-off, but we have to wait until, of course, the end of the day or the end of the week. So what you do on 4-hour chart, you can see it seems to be a sell. But then you can see we have to wait for it to cross the 50. But when you go to 1-hour chart, you can see it has already crossed the 50, but has almost hit the oversold position. That's why I was saying this can be most likely be a fake out. So on this one, we usually wait. But at least I'm seeing on H4, the moving average are being smoothed out very well. So let's continue. So how do you use them? So for simple moving, what the difference is when you want a moving average that is smoother and slower to respond to price action, then a longer SMA is the way to go. So when you want a moving average smoother and slower to respond to price action, then you use a longer SMA. So I'm going to use a longer SMA. So you can see there's a hair and a dot of it. SMA moves slower, EMA moves faster. So scalpers and day traders, we are looking at a shorter EMA. Swingers, position traders, we are looking at a longer SMA. So let's just go now to the difference. There are these ones. Displays a smooth chart that eliminates most fake outs. The other one, slow moving, which may cause a lag in buying and selling signals. This is SMA. So what we are going to do, let's go now to the practical because of our time. So let me finish. Not finish. So before we go there, let's see how we use it with support and resistance. So all I'm going now to show you is how to use it with support and resistance levels. And I'm also going to show you how to analyze it. So let's go. Yeah, most likely is support and resistance. So let's go to the chart now. So now this is my, I've drawn so many things. So let me remove my 1 minute templates object. They are here. Let me remove the fibs. So that we have a plain chart like this one. So I'm going to use weekly first. So I'm going to add another moving average. It's called the 200 SMA. Now this one, I'm going to be using it on the 1-hour time frame. This one, I'll give it blue. So this one now is able to act as my main support and resistance. It's the main moving average, or it's the mother of all moving averages, 200 simple. You can use simple or you can use EMA, but the reason I'm using simple, I'm trying to track the future of the price action. I hope guys you can understand that. So let me put okay. So you can see on weekly, it's still above. Anytime the candles are above the blue line, we are still trending up. Let's go to the daily. Daily, you can see it's below. That means somehow the price somehow is still below. So most likely there was a big sell. This sell is the one that caused the moving average to go below. Let's now go to 4 hour. So now 4 hour should guide us. You can see 4 hour, it has crossed the 200. And the last time it crossed 200 here, you only do this. You calculate how many pips it went down from here. That was around 641. So you can see it's above. So most likely this might be above because this moving average seemed to move above. Let's go to 1 hour. Yeah, now 1 hour can be, you can see now it's smoothed out. So now this moving average, the 200 acts as our support and resistance. You see every time it crossed, how many pips did it go down? Let's look at here. It went down 256 pips. So what I'm going to do, I'm going to zoom out and show you how you read the moving average. So I'll draw my support and resistance. So this is my support down here. Then I'm going to draw resistance 1. And then we are going to draw our main resistance on D1. Let's draw it around there. So I think that's okay. Then zoom in, but then go back to 1 hour. Yeah, so you can see our trend is just below our resistance. That's why I was saying I couldn't call a sell yet, because what you do, you look at how far this price is from the moving average. You can see there's quite a distance. So for us to really call this a short, this move, or short means sell. For us to really call this a sell, this candle has to come and cross this moving average. The way you can see here, it crossed. Let's go and see where it crossed. Yeah, the way you can see here, it came up and crossed. And you can see the moment it went up, it bounced from here, went up, didn't quite actually get there, and finally went up. So let's go back to 4 hours, because you can also see on 4 hour, it's smoothing out. You can see the moment it came down, now our moving average here was acting as our resistance. Now, if the price bounces back up, our moving average now will be acting as support. So I hope we are clear on that. So I'm going to add you another moving average. This can be EMA or SMA, but I'll also use it's 50. This is one of the most important moving average. So I can use EMA or I can use SMA, but EMA now, you'll see the difference. Look, no, I want to use the same color. Let me change the color. Can use maybe aqua or another brighter color like this one. So look at 50. So guys, I wanted you to see, I'm using 50 EMA. Okay, user 1, admit. 50 EMA, you can see. So 50, what it does, this is one of the, if you will not remember anything, remember that 50 is very important, because you can see anytime they crossed 50, look at here, the moment the 200 crossed 50, there was a really big uptrend. This is the zone. The zone, this is now where we ride the trend. And you can see we are within the support, the resistant area. So, and this was our support. So let me go to H1. Let me zoom in again. And then I'm going to use, now this is EMA. So I'm going to change it to SMA. You see the difference. Yeah, you can see the difference. It has somehow moved away from the candles. So for this one, I think I'll use EMA because I'm tracking the recent price action. Yeah, I think that's better. And then now, if I go to a longer time frame, oh, this is good. So you can see they have already crossed. That's why I was saying I wouldn't tell you to sell yet, because now you see when they cross, let's look. The last time they crossed around here, you can see there was a lot of consolidation. The market dipped, or the market sold off how many pips? Up to 638 pips. So the reason I'm showing you this is because even if you're day trading, let's go to M30, for example. Yes, now this is a good example. You can see on M30, the candles are this might be a bounce. We talked about the break and the bounce, and you can see you have to wait for the confirmation of this candle. So if this candle enters or ends up as a buy, most likely this trend might be the same. The reason is that 50 and 200 are still far apart. If they were closer, maybe moving average moved above 50, then of course we'll be having a sell. But because we have this zone started from down here. You can see it crossed here, it almost waved here, and it's been really going up. So this is on technical analysis purely. So purely technical analysis is showing us on M30 alone, we could not be calling this short yet, because now on our recent price action, even the 5 and the 10, yeah, they are showing a downward move, but this is because we are using shorter data points. We go to M15 the same, you can see. But now I will not recommend you to use M15. I recommend you, if you are day trading, you can use M30 or H1, even if you're scalping, because even if you're scalping, you need to follow this trend. Then look at H1, the same thing. So I think this is okay. So for moving average, I'm going also to send you a book on moving average. So I have it. I'm going to send you after class, because I'll just send you a very simple strategy on how to use moving average. Once you understand moving average, you decide. The most common one is 250. That is, I can do 200 SMA, and I can use 50. So 50 is very important, because 50 shows us whether the market has broken down or up. But if you're going to use 50, you have to use a longer time frame, like 1 hour or 4 hours. And the 4 hour is good because it gives you the actual trend for the whole week. So you can see this is our between today, Tuesday, and Friday. So I can't call that sell yet. That's why I was saying I can't call it, because I'm using a shorter time frame. Let's look at D1 also. So on D1, you can see also they are kind of somehow formed above. So for us to call this a short, this candle has to break this moving average, the 50. But if it bounces up above, of course we are up. And you can see even on D1, we are still above the 50. So moving average, basically that's what it's all about. So today I was just combining moving average and support and resistance. So any questions, guys and ladies? Because I didn't have much. Let me write here. Any questions? Oh, we'll be sending material on moving average.